What is Ethereum merge and how does this affect you as a crypto investor? Many of you may be asking, what happened to Ethereum? What is this merge? Maybe some of you are thinking how this affects you. Is it a good thing or a bad thing? Is it still worthy to invest? We know these questions are in your head right now. Luckily for you, Crypto Clipper, we've got the answers. In this video, we will be talking about what is Ethereum merge and how this affects you as a crypto investor. Remember that while the first step is completing any of these amazing courses, the second and possibly more important step is taking action, even if it's an imperfect action. The price and market cap of Ethereum has increased in a consistent fashion, with the most recent notable event being the ETH connected with the proof of stake consensus. Many are saying that these positive developments are directly influenced by the anticipation of this upgrade, which will mark Ethereum's official switch to proof of stake. To understand what the merge really means, it is important to first understand that Ethereum runs on a proof-of-work consensus, like some other blockchains including Bitcoin, and that there is no merge yet. The older consensus mechanism powering cryptocurrencies today is proof-of-work, while the newer one is proof-of-stake. Many argue that it also works better than previous methods. Namely, the proof-of-work has come under heavy criticism in recent years, primarily due to ecological, scalability, and security concerns. On the other hand, using blockchains with proof-of-stake consensus guarantees faster transactions at cheaper fees and with less energy use than proof-of-work blocks. Now, what does the merge demand? With the upcoming Ethereum merge, Ethereum mainnet and Beacon chain will essentially merge. This will allow the current production mainnet to continue running through proof-of-work while the other chain runs off proof-of-stake. By transitioning from POW to POS, this upgrade will legalize the purchase and sale of ERC20 tokens on Ethereum. This will allow for all the benefits of POS, including security, and bring the transition to fruition. The Ethereum team has an explanation for this merge. They explained it this way. A new spaceship, the Beacon chain, will have an engine and a hardened hull, as well as a docking port for the Ethereum network. The current Ethereum network will dock with this new system to create one big ship able to travel to different places that requires a sophisticated, computerized algorithm like the Beacon chain. And yes, the merge will happen anytime soon, for it is announced that its expected launch will be in the second quarter of 2022. With the price of Ethereum being unprecedentedly high, interest in it is at an all-time high. As the merge rollout period draws near, interest in it is reaching record levels on Google. The amount of search requests for it are skyrocketing as the launch time approaches. Ethereum's popularity has been trending upward. As of late July 2021, searches for the keyword Ethereum merge were only 6. Afterward, the term increased to 56 by the end of February to early March 2022. By mid-April, the number of search queries reached an all-time high of 100. According to crypto analytics platform Into the Block, head of research Lucas Ortomero shared this information on March 25th. On July 2nd, at press time, Ethereum had a current market cap of $166.57 billion with a one-day price variation of 12.12%. The change in price over the day has marked an increase of 3.08%. As per available information on CoinMarketCap, the market capitalization of Bitcoin is around $376.72 billion as of now. So now you know what Ethereum the merge is, and that public interest has been high since it was announced. Let us now go to why it has become the most important event for crypto investors who use Ethereum. Just like what we have talked about earlier, the upcoming Ethereum 2.0 upgrade is the biggest news in crypto today, said by Ran Neuner, founder and host of the Crypto Banter, co-founder of Crypto Trader, and CEO of On-Chain Capital. Ethereum's authorities want to merge the proof-of-work and proof-of-stake chains. This will allow the network to generate yields up to 10 to 15% according to experts. Importantly, the merge will help to reduce environmental impact of Ethereum significantly while also helping to solve problems of costly power usage. Nooner told Michelle McCory, the editor-in-chief of Kitco News. Nooner also mentioned that proof of work is a high electricity consumption and a very expensive equipment-consuming way to mine cryptocurrencies or to verify transactions. Bitcoin faced criticism when it first started as a proof of work and was so highly resource-intensive that Bitcoin users were able to mine coins with their home computer hardware. Bitcoin, which uses proof of work for currency, has been heavily criticized for its environmental impact. Nooner mentions that when Elon Musk made an announcement that Tesla is now accepting payments in Bitcoin, he received pushback from his board of directors about using a non-environmental social governance asset when Tesla is trying to preserve an image of being one of the greenest companies in the world. Bitcoin was recently the subject of discussion in the European Union due to concerns that it does not have ethical, social, and governance responsibility qualities. However, members of the European Parliament voted against the ban. He said that what they're doing is that they're moving Ethereum from proof of work to a much more energy-efficient proof of stake. He also added that it will be very fast and it's just as powerful. He also said that the only issue is that somehow they have to combine the chains, the old proof of work chain and the new proof of stake chain. There's also the issue of scaling that proof of stake aims to fix. Nooner also said that proof of work is not very scalable. One of the big criticisms that both Bitcoin and Ethereum have been facing, especially Ethereum, is that it uses proof of work mining. He said that this cannot keep up with the transactions that are required. Nooner also noted that Ethereum is needed for not just investments, but is being adopted by a wide range of decentralized finance applications. He also explains how the supply of cryptocurrency will continue to shrink as time goes on. He added that the second thing that will happen, which is very interesting right now, is that Ethereum has an uncapped supply. Bitcoin has a capped supply of 21 million, but Ethereum has an uncapped supply, meaning theoretically, you could keep printing ETH forever and Ethereum is not scarce. But Ethereum also has another mechanism. This is called the burning mechanism. When every transaction is completed, we burn a certain number of Ether. When we destroy the net burn, they are gone forever. In addition, he also said that the Ethereum emissions, the amount of Ether that is created every day, will be reduced by 90%. Finally, the dividend the merge plans to pay out on Ethereum is also higher than that of other platforms. Well, the returns today on staking Ethereum is 3.9%. When the merge happens, the returns on Ethereum are going to be between 10 to 15% per year. Thanks to Nooner for telling us all this information. With a burn rate that exceeds the rate of which new coins are being minted, there would be a shortage of Bitcoin, with each coin valued at $10,000 or more. But this would, in theory, take place over thousands of years. Ethereum is now deflationary, and this is good news for investors. It turns out that they may be able to buy into a good investment that's also better for the environment. Bitcoin, on the other hand, is regularly mined and will heat up the atmosphere. That said, 10 to 15% returns are outperforming any other investment in the world right now, and it's also happening before our eyes. Unfortunately, no one ever yearns for a scarce investment or an inferior return if given the choice. From his personal investments, Nooner sees more value from Ethereum as opposed to Bitcoin. Currently, the Ethereum market cap is not taking over Bitcoin's. The Ethereum flippening, a theory that Ethereum market cap will overtake Bitcoin, is still not happening anytime soon. Nooner also said that while he feels in a couple of years it may be a discussion worth having, but right now he's inclined to invest in Ethereum. For as long as January 2020, Ethereum was devaluing Bitcoin until the trend reversed and ETH became more valuable than Bitcoin. Flipping the coin? That's ambitious. For now, if you have to pull a trigger and you cannot decide which cryptocurrency to put your money on, His money's on Ethereum. Now let us discuss the 3 misconceptions about the merge. Since it is widely publicized and piqued the interest of many, these 3 misconceptions about Ethereum's next big thing, the merge, have affected its supply and environment. Again, we all learned that Ethereum is aiming to reduce its impact on the environment and increase institutional investment. Here, it plans to merge so that fewer coins are released. Mining of cryptocurrency becomes obsolete, and Ethereum's security increases against potential attacks. However, there are other narratives about the merger that are inaccurate. It can be difficult to determine what is true and what is not. Here's number 1. The merge won't create a new Ethereum token. One assumption people have is that the new Ethereum token will be different. But this is inaccurate. Ether, the existing Ethereum cryptocurrency, will remain the same. It is easy to see why the Ethereum Foundation issued a statement in January, referencing how the question of whether or not the switch of the system would happen. This past January, the Ethereum Foundation and the core developers decided that it was time to end this labeling of the merge. Too many scammers were trying to use this term to get people through a new token separate from ETH. But it's false. Ethereum has made it clear that ETH2 tokens are not an official currency and are just a scam. The blog post by the foundation went on to mention that new types of scams can come up with any project, which is why it's so important for users to research projects before investing. Rather than trusting any promises, be wary of any airdrops or free tokens. Continually check the website for any developments from the merging partners to ensure you didn't lose out on anything in the process. Number 2. The merge will not affect or lower Ethereum's transaction fees. The merge was both predicted and anticipated to lower the transaction fees for ETH, but this is not at all accurate. Tim Baico, Ethereum developer, points out that the gas fees did not change in any way even with the implementation of the merge. Many in the community are saying that this will be a big shift, but it's not. For the 9th time, Ethereum will only shift from proof-of-work model to proof-of-stake. Although Ethereum's solution for mining coins is proof-of-work, it can be hard on the environment. This process uses complex puzzles to validate transactions and create new coins. New protocols are being developed to replace this model due to its environmentally damaging impact. The proposed upgrade will switch the mining to proof-of-stake, and this will let users verify transactions according to how much coins contribute. In return for staking more coins, the user has a higher chance of being selected in order to validate transactions on the network and earn a reward. David Lowand of Bitwise Asset Management said in an interview that the merge is Ethereum's most important upgrade to date. With the shift from proof-of-work to proof-of-stake, every crypto network needs to decide how they choose, in a decentralized way, who gets to propose new blocks of transactions. Others will later validate and add to the blockchain. The merge will mark Ethereum's shift from provable work to provable stake. Currently, Ethereum has both a proof-of-work and a proof-of-stake chain running in parallel. In the future, once all users have shifted to the proof-of-stake version, Ethereum's mining chain will become obsolete. While only the proof-of-work chain conducts transactions now, in the future, it will be processed on the beacon chain. Although many might hope that this change in structure would cause the price of gas fees to decline, because most of those costs can add hundreds of dollars to the processing fee of an Ethereum transaction. However, such changes are unlikely according to Baico. And lastly, for number 3, there's a misconception that there's no set date for when the merge will happen. A major cause of skepticism is that there is still no official timeline, but Baico points out that none has been released yet. Ethereum backers are speculating that more announcements will be made in June, but it is important to remain skeptical as some might be scams and fake. According to Baico, if you do hear something that sounds too good to be true, it probably is. The unknown timeline for the transition is dependent on just how much preparation is required for the events to end as planned and successfully executed. The success of the event is a big deal because there's a great sum of money relying on Ethereum. It not only powers Ether, the second largest cryptocurrency, but also supports popular decentralized finance applications and non-fungible tokens. To be certain that the merging is smooth and successful, Ethereum developers launch a number of tests and upgrades in order to ensure that this can happen. Lowand explained, time-critical upgrades are always monumental endeavors, which means a lot of subsequent testing and preparation goes into them. One of the mantras for mission-critical upgrades is to simply wait until they're ready. What do you think about Ethereum's The Merge? Have we answered your question? Have you heard about these 3 misconceptions and actually believe in them? What are your thoughts? Now that you have learned about its possible effect on you as a crypto investor, are you as excited as us for Ethereum's next big upgrade called The Merge? Let us know what you think about this video in the comments section below. That's it for this video, Crypto Clipper. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!